Welcome back, everyone. In this video, I'm going to be giving you 3 stocks with amazing year-over-year dividend growth. And not only do these companies provide great dividend growth, but they also have a great consistent history of doing dividend increases as well. So the first company on this list is Lowe's. And now Lowe's is a retail company that specializes in home improvement. It operates over 2,000 retail locations. And as you can see by the site, it sells a variety of home improvement products or just products generally available around the house for both retail consumers and also contractors to improve a home. Pretty much everything you can think about regarding home improvement or home accessories, you can get at Lowe's. And with all of its locations, there's pretty much one in driving distance for everyone. And over the past 5 years, not only has the dividend increased very well, but the price appreciation on these shares have increased extremely well as well. So over the past 5 years, just in share price alone, the company is up 127% about. And I would say that price appreciation is amazing considering that the S&P 500 is up 88%. Lowe's has handedly beat the S&P 500 just in price appreciation over the past 5 years, which is not bad and not expected for a retail company. Usually you would think that these results would be more like a tech company, but Lowe's just provides great results all around. So let's talk about why you came to this video, and that is the dividend. Currently, the dividend yield is at 1.76%, which isn't too high, not too low either. Again, this is about dividend growth companies and not necessarily dividend yield. Remember, the longer you hold a company like this, the more that yield on cost will increase. So that will give you a greater value for your dollar down the line. Speaking about the dividend growth, over the previous 5 years, the average dividend growth is about 16.4%. And that is some wonderful dividend growth considering that even dividend ETFs like SCHD, which are designed to appreciate in dividends, only grew around 11% year over year. So Lowe's not only beat out the price appreciation of the S&P 500 over the previous 5 years, but it also beat out the dividend growth rate of SCHD for the previous 5 years as well. So wonderful dividend and appreciation results from this company, and it has grown its dividend for 61 years. So a great lengthy history of dividend growth, high dividend growth rate, and also great price appreciation. And also the payout ratio of this company for its dividend is only about 38%. So that is a very safe and secure dividend as well. Next up on this list is Texas Instruments, and Texas Instruments is a multinational semiconductor company, and it is one of the top 10 largest semiconductor companies worldwide based on sales volume alone. It provides various tech-related products and services. Overall, Texas Instruments did grow in price appreciation by about 54%, but it did not beat out the S&P 500, which grew 88%. This performance isn't that bad. However, Texas Instruments is kind of seen as the dog of the semiconductor world, but it does have some great room to grow as well. A lot of competition really starting in this field, but I think Texas Instruments is one of the most fairly valued semiconductor companies in this field. Of course, there are other companies that have gotten slammed recently like Intel, but Texas Instruments seems to hold up in all forms in revenue and in cash flow in general, compared to something like Intel, which had an atrocious time over the past few years. A little bit about the dividend. Current dividend yield is 3%, which is quite high in the tech world. So it is also the highest dividend yield on this list. So keep that in mind. Dividend growth for the previous 19 years has been great and consecutive, so it should keep growing in the future in an ideal world. And 5-year dividend growth rate is about 10.4%. So very high and kind of in line with something like SCHD. But the problem with this company is that its payout ratio is extremely high, and it seems that almost everything that this company earns goes out to dividend payments. So it's definitely something to consider when you invest in this company. You're going to get a decent company with a decent yield and also great dividend growth, but I'm concerned that this company may have trouble paying the dividend and also increasing the dividend in the future with such a high payout ratio. And the final company on this list is Kroger, and Kroger is a retail company that operates supermarkets throughout the United States. has approximately 2,700 grocery stores under its footprint, and in about 35 states it operates. So pretty big company throughout the United States, but it's not as big as some of the companies that you hear about like Walmart or even like Costco that have even more locations out there. Kroger really is more seen somewhat as an up and coming company, and a lot of people even that I've spoke to don't even really know what Kroger is. You know, even before I started making this video, I didn't really know all of the products and services that Kroger really had. So I thought it was primarily a grocery store company, and it is, but there's also a variety of other kind of multi-department stores that it operates, such as manufacturing plants, fuel centers, pharmacies, little medical clinic stores, jewelry stores, and even convenience stores as well. And that is pretty interesting. I didn't know that. This is quite a diversified company overall. And like Lowe's, this company has blown past the S&P 500 in share price appreciation alone, rising about 127% in the previous 5 years. And remember, the S&P 500 only rose about 88%. So great performance from Kroger. And again, this is kind of one of those companies that performs so well, you would think it would be like a tech company with its share appreciation. But this kind of goes to show, and I did this video not concentrating on maybe high-flying tech stocks with their dividend growth, but I wanted to show some companies that aren't in these kind of golden industries, so to say, and kind of display that, hey, companies in other industries and that operate in different ways are also very good in growth as well. Current dividend yield on Kroger is 2.1%, so again, not good, not bad, a bit over 2%, still higher than the S&P 500, I believe, in dividend yield. Current payout ratio is great at 26%, should have plenty of room to pay and grow that dividend over time. Speaking of which, the dividend growth rate is over 15%, which absolutely defeated SCHD's dividend growth rate. And again, this company performed better than the S&P 500 in price appreciation, and the dividend growth rate was better than SCHD over the previous 5 years as well. So great thing, beat out pretty much two benchmarks that people use for both price performance and dividend growth performance. And the dividend growth has been very consistent at 17 years of dividend growth. Overall, great company, great diversification, pretty healthy payout ratio, decent yield, and yeah, really not much to say other than this is a great dividend payer. Now, personally, I don't own these companies. I buy ETFs only and leave the stock picking for other people. But I do think that these companies would be great additions to a portfolio, possibly, if you are looking for dividend stocks. I know by the YouTube search history that kind of displays what's popular. People are always looking for hot new dividend growth stocks, it seems. So kind of wanted to give you a list of 3 that I thought were pretty good, and just to kind of get this content out there to help you all maybe make some considerations. Let me know what you do think of these 3 stocks. And remember, if you did appreciate this content, leave this video a like to get this content out there to a wider audience. If you'd like to see more of this content, please consider subscribing for future content, and I will see you all in the next video.